Good afternoon, everybody. This is a MMSA webinar, and the title of today's webinar is Compliance with NI 43-101, the regulator's observations on ongoing and emerging challenges, the good, the bad, and the ugly. And I will go over a few of the logistics. We would like for you to enter your questions and comments into either the Q&A or else the chat. And you can find those by moving your cursor to the bottom of the screen and they should appear. We record and post all of our webinars, and those will be available on our website. And I would like to ask that people not pull slides out of the recording. The slides will be there in perpetuity. We never take them down. And also a link will be provided for you to go ahead and look at some educational tools that you can look at. So with that, I will hand it off to Curtis Clark.
Good afternoon, all. My name is Curtis Clark. I'm the chair of the Qualified Professional Enhancement Committee of the Mining and Metallurgical Society of America. On behalf of MMSA and the BCSC, I welcome all who have taken the time to participate in another event in our series of webinars organized for participants in the mining industry. Firstly, for MMSA members, but also for the benefit of mine operators, project proponents, independent professionals, academics, financiers, the legal sector, and mining detractors. Ours is truly an inclusive association. NI 43-101 is a Canadian rule that governs how stock issuers disclose scientific and technical information about their mineral projects to the public. Today's webinar is a feedback session whereby we will attempt to close the loop a little with an address by the people charged with monitoring and regulating disclosure reports. We are very pleased to have Mr. Chris Collins and Ms. Victoria Yell of the British Columbia Securities Commission address the assembled. It has now been over 15 years since Canada led the way with an act of parliament requiring disclosure in a rigidly prescribed manner of scientific and technical parameters of every mining property which a project proponent wishes to explore and develop with investor funds. Regulators continue to see qualified persons failing to comply with the requirements of NI 43-101 and the technical report form 43-101F1 in a number of areas. Some are long-standing observations, while others are emerging with the renewed enthusiasm in mining capital markets. The brief presentation and subsequent Q&A session will be underscored by a core principle of NI 43-101, the role of the qualified person acting as a gatekeeper on behalf of the investing public and in upholding the integrity of the mining capital markets. By way of introduction, Victoria Yell is a professional geologist and senior geologist with the British Columbia Securities Commission. She joined the BCSC as senior geologist in mid-2016 after over 20 years with Teck Resources Limited. While at Teck, Vicky worked around the world as part of the exploration, energy, exploration business development, and corporate development teams on a wide range of projects and commodities. Vicky holds a Bachelor of Science degree from University of Toronto, a Master's of Science degree from Queen's University, and a graduate diploma in business administration focused on mining from Simon Fraser University. She is also past chair of the Vancouver MEG, a past chair of AME's BC's Mineral Exploration Roundup, and has recently completed 2 terms as a counselor for the Geological Association of Canada and is a past president of. He is also a registered professional geoscientist with UPHOlding BC. Mr. Chris Collins is a professional geologist and the chief mining advisor at the British Columbia Securities Commission. He has over 25 years in the mineral exploration and development industry. He worked with Noranda Mining for 17 years in base metal exploration and mining operations in Eastern Canada. He spent 3 years deployed internationally on projects in Brazil, Chile, and Norway. He joined the ALS Laboratory Group as Director of Eastern Canada Operations in 2004 with oversight of labs in Mississauga, Val-d'Or, Timmins, Thunder Bay, Sudbury, and Burlington. He joined Eagle Mines in 2007 as Vice President of Exploration, focused on the Bruce Channel deposit in Red Lake, Ontario. Skipping ahead, Chris has a Bachelor of Science degree from Memorial University of Newfoundland and a Master's of Business Administration from St. Mary's University in Halifax, Nova Scotia. He is a registered professional geoscientist with APEG BC and PEGNL, Professional Engineers and Geologists of Newfoundland. Vicki and Chris, welcome to today's MMSA webinar. The floor is yours.
So thanks, Curtis, for the embellishment. Fabulous. Victoria is going to run the slides, and I'm going to do the early part of the presentation, and I'm going to keep it at the 20,000 foot level and just give an overview broadly of the securities disclosure framework here in Canada, because I think that's important for your members. And then Victoria is going to drill down a lot deeper on some of the themes and issues that we would like to present to this group, and hopefully we can get through all of this in about 30 minutes and then give everybody an opportunity to to ask questions of us and challenge us to try and enlighten you about the things that we see and we do. So next slide, please, Victoria. So unlike in the US, we do not have a single securities regulator. We actually have 13 different provincial and territorial agencies, and they are like us in British Columbia. They're accountable, or they report to the provincial or territorial government. For the most part, in the larger provinces like British Columbia, Alberta, Ontario, Quebec, they're generally self-funded. And truthfully, British Columbia, Alberta, Ontario, and Quebec, generally speaking, regulate the majority of mining issuers. In fact, we regulate the majority of all publicly reporting companies in Canada. Just as a point of interest, British Columbia generally is responsible for about 66% of the total Canadian reporting mining issuers. And if you were to kind of translate that into the global distribution of reporting mining issuers in jurisdictions around the world, we probably have oversight of somewhere between 30 to 40% of the total reporting mining issuers in the planet. With Canada, Australia, and the United States certainly being the largest jurisdictions. Issuers or mining companies, will call them issuers, so please don't get too uptight about that term. In our vernacular, issuers means a company that has reporting obligations to a securities administrator. In Canada, they have what we call a principal regulator, and that's basically determined by where your head office is, and you will generally meet the disclosure requirements or the reviews, or your submissions will be to the principal regulator, and the other jurisdictions will rely on the principal regulator to make the decision. We have an umbrella organization called the Canadian Securities Administrators, and it generally coordinates all of this dispersed regulatory framework through the 13 jurisdictions. The role of CSA is to coordinate and harmonize the security rules and develop national instruments. And a national instrument is a national instrument when it in fact is enacted into law in each of these various provincial or territorial jurisdictions. Next slide, please, Victoria. So I don't want to spend a lot on this, but I think we still will lay the groundwork. Securities laws, and I may be wrong on this, but I think the whole concept of securities laws developed in response to the Great Crash in 1929 and the development of the Securities Exchange Commission in the US in 1934, I believe. Securities laws exist to protect investors. Fundamentally, our goal is to ensure that the companies who have reporting obligations and are forming capital in public markets are not involved in unfair, improper, or fraudulent practices. And you see the asterisk. By practice, we mean disclosure. We don't necessarily mean practice as qualified people might might see, practice with respect to how I might collect my samples or do this. Our goal is also to foster fair and efficient capital markets and maintain, investor confidence in the integrity of the capital markets. And we do this by requiring the companies or the issuers to provide specific filings. National Instrument 43101 technical reports are such a specific filing. And the goal, of course, is that all of these required filings are consistent, they're comparable. You're able to compare the filing from one issuer to the filing from another issuer. And it's also to provide investors and capital market participants with information that's useful to them to make an informed investment decision. Next slide, please, Victoria. So, why do we have mining disclosure rules specifically? As you all know, mining is incredibly capital intensive and it's also incredibly risky. And traditionally, mining companies have always been big participants in public capital formation because of their need to access significant amounts of risk capital. Investors rely on the information the company provides to them for these investment decisions. As again, we all know, mining has numerous intrinsic risks, and one of the risks that should never be acceptable is being misled by a company. Most of these intrinsic risks, as investors, we understand, are part and parcel of an investment in a mining company. So we regulate disclosure primarily to protect the investors and to maintain the integrity of the capital markets. And as everyone knows, once the public loses confidence, it really is very difficult to recover that. Next slide, please. So here's the mining securities regulatory framework in Canada. At the top, the owners of the Securities Act and the rules are securities commissions. And these would be like the Ontario Securities Commission, the British Columbia Securities Commission, the Autorité du Marché Financier in Quebec. On the right side of this graphic, securities commissions have oversight of the stock exchanges, and the same as in the US, the stock exchanges are in fact for-profit companies. They have their own policies to maintain their own marketplaces, but they also have an obligation to report to the securities commissions, and the securities commissions retain oversight of those marketplaces. In Canada, we have another layer in this space, which is called IROC. That's the Investment Industry Regulatory Organization of Canada. And IROC's role is to regulate the investment dealers and the stockbrokers who participate in our capital market space. One of the other things that IROC does is it also manages what we call the real-time market surveillance requirements. And it also ensures that the stock exchanges adhere to universally accepted market integrity rules with respect to trading and how trades are enacted and trades are done. And part of that process on real-time market surveillance for IROC is, in fact, to evaluate mining companies' news release disclosure in real time to ensure that investors are not subject to potentially misleading or harmful disclosures. On the left side of this graphic, we have the Canadian Institute of Mining and Metallurgy. And in our country, they're the established standard setters of the definitions that we use in our mining disclosure regime. And they're also responsible for developing the best practice guidelines that we expect the professionals who are in our regime to adhere to. So we have strong reliance as well on the professional associations, and MMSA is a professional association, a foreign association recognized in our regime. And we rely on the professional associations to ensure that their members have a minimum level of education and experience requirements, but also two, that they're bound by codes of ethics. And there's accountability mechanisms in place when they stray from those codes of ethics in performing their professional duties. And Victoria put it in, MMSA falls in this. The regulation of the professionals is out of our regulatory scope as securities commissions. In Canada, for example, professional associations, engineers and geoscientists have their own statutes, they have their own acts, and they have actually statutory authority to regulate the professions. But we do work collaboratively with these groups. Next slide, please, Victoria. So the role of National Instrument 43-101, and we put this right at the top, it's about disclosure. And I think it's really important that everybody keeps this front and center throughout this entire discussion. It's disclosure. We require that the public disclosure of technical information reflects information that's balanced and not misleading. It's understandable to a reasonably informed investor. And generally speaking, when we say, or not generally speaking, truthfully, when we say reasonably informed investor, we're not talking about experts in mining or experts in mineralization. We're talking about the public who may be interested in making investment decisions in mining companies. It must be based on reliable, and I would really want to emphasize this, verified data. Verification of the disclosed information is so important. And I think for any of you who may have been around when our whole rule developed, and many attributed, of course, to a number of scandals, one of the core things that came out of it was the requirement for important and in many cases independent verification of the technical data that's being used in the disclosures. It must be based on reasonable assumptions which are clearly explained. You need to use standardized terms and definitions that are consistent in their application across the entire disclosure regime. The disclosure should be unbiased. You need to identify both the potential risks and uncertainties as prominently as you identify the potential opportunities and rewards. And then a final and really critical piece is that it needs to be signed off by a professional qualified person who ultimately is taking responsibility for the information that forms the basis of the disclosure. Next slide, please, Victoria. So here's an important concept as well, and we really emphasize this, especially when we're educating investors, maybe more so than qualified people. National Instrument 43-101 is not a guarantee of good work. It places the obligation on the company or the issuer to hire or employ the appropriate qualified person, and the expectation is that the qualified person is doing the right work to a professional standard that can be defended amongst his peers. It isn't a cookbook for mineral resource estimation. Our rule sets the standards by which the estimates must be disclosed. It does not prescribe how the estimates must be done. It's really designed so that others can review and peers can judge the work of the qualified person. And finally, our disclosure rule is not a vetting process for a regulatory agency. And I think this is also really important. Just because a technical report is filed on our electronic filing platform, CIDR, it does not mean that it's compliant. And it certainly does not mean that it's been subject to a regulatory review. Ultimately, qualified persons sign a certificate, and they, in fact, are the ones who's certifying that it complies with the disclosure requirements. Next slide, please, Victoria. So, and Victoria's going to drill down deeper on these themes as she goes into the next part. But what are the core principles of National Instrument 43-101? There's really three. The first and foremost is the qualified person. And again, the QP's primary role is a gatekeeper, and you'll probably hear us use this word more than you want to hear it. But the critical fact of the matter is the QP is the intended gatekeeper who is protecting the public investor. He works, or she works, really on behalf of the public investor. We recognize that your client is the mining company who's paying you, but your primary public protection obligation has to be first and foremost. It can only really function as intended if the qualified persons really understand and embrace their role in upholding the public interest. The other core pillar is that all of the work is guided by the definitions and the best practice guidelines and standards that in our world, the CIM publishes. But certainly we recognize that in different jurisdictions, there are comparable standards. For example, the SME guide is for all intents and purposes interchangeable with CIM definition standards and best practice guidelines. So we look to the standard setting organizations in whatever jurisdiction our companies may be working and recognize that it's not exclusive to CIM. And then the third and final pillar of our disclosure regime or core principle is a technical report. And the technical report is a required filing and is predicated upon milestones that are related to the company, such as a financing, or milestones that are tied to the mineral project, such as the first time disclosure of mineral reserves, as an example. And the intent of the technical report, which in many cases must be authored by independent qualified people, is to provide the investor with all of the required context around the scientific and technical disclosure supporting a mineral reserve estimate or a mineral resource estimate or a feasibility study, so that they can confidently understand the basis of it. Next slide, please, Victoria. So we put up this kind of Venn diagram to kind of highlight the three kind of key requirements. And I think, Victoria, at some point we'll replace that with a better one that you've crafted, of a qualified person. What we're looking for really to serve as a qualified person, there's an educational component. So in our world, or in our regime, you must be a geoscientist or an engineer with a university degree related to exploration and mining. There is an experience component. You must have a minimum of 5 years of experience in mineral exploration or mining. And I think I want to emphasize clearly here that the way we apply the rule and the principle behind the rule is the clock on your experience starts ticking once you've achieved the educational and accreditation requirement. For example, in Canada, that education threshold does really not begin you don't begin to acquire, the experience until you're a registered professional engineer or a registered professional geoscientist. What this concept is you're an expert in the securities disclosure world, and that expertise doesn't occur the day that you're registered as a professional engineer and can begin servicing your clients in a professional capacity. The third piece is the ethics, and this is where organizations like MMSA, or in our case, Engineers and Geoscientists BC, come in. These are professional associations in Canada. They're recognized by statute, and they operate with codes of ethics. There's a threshold of education and experience requirement to gain your accreditation, and most importantly, they're prepared to hold their members accountable when their practice it goes off the rails, so to speak. Next slide, please, Victoria. So disclosure under National Instrument 43-101. In our rule, it means any oral or written piece of scientific and technical information that is made by or on behalf of a reporting company or a private company. In fact, in our rule, you do not have to be reporting to a securities disclosure or to a securities regulatory agency to be offside on our disclosure requirement. If that information is intended to be or reasonably likely to be made available to the public in a jurisdiction of Canada, then you have to comply with the requirements of National Instrument 43-101. And it says there whether or not it's filed under securities legislation. So companies' social media platforms, companies' websites, companies' marketing documents, which may not be required securities disclosure filings, they have an obligation that they comply with the disclosure rule. And even if the company, in fact, is private and is not currently a reporting issuer to a securities regulatory authority in Canada, if it's distributing this information to the public in Canada, it needs to comply with our disclosure rule. Next slide, please. So here at our organization, and this is comparable to all of the securities agencies with mining technical expertise, we undertake a number of disclosure reviews. These are the points in time when we will actually consider the public disclosure of a company. The first and certainly the most important and critical one we do is a prospectus review. I mean, a prospectus document is the seminal disclosure document in our entire securities disclosure framework. It's just a critical investor protection tool. When companies go to raise money in public markets, there is an expectation that they will file a prospectus, and that prospectus must provide full, true, and plain disclosure of all material facts with respect to their business. The key takeaway is once you're participating in the prospectus regime, and where MMSA members may come in, if you author a National Instrument 43-101 technical report, that technical report may be referenced into the prospectus. Therefore, you, like officers, directors, underwriting agents, and experts, the QP, can be held to account for any misrepresentation that may be contained in a document in that prospectus or a document incorporated by reference. There are a number of forms of prospectus offerings. A common one that we deal with is the long form, and that's typically is an IPO or an initial public offering, although we often now see what we call non-offering long form prospectus filings, where companies have already distributed securities using prospectus exemptions, and then they're looking to get listed in a public marketplace, and part of that process involves becoming a reporting issuer. In these cases, we'll review the disclosure document and we'll typically issue comments if warranted within 10 business days. The other kind of typical prospectus offering we see are called short form, and there's kind of two streams. There's the conventional short form prospectus offering, where a company is filing a prospectus and all reference documents, most of which are significant pieces of their continuous disclosure required filings, into the prospectus, and we'll send an initial comment letter to the company within 3 business days if we have any concerns that it contains material non-compliance, which would cause us to refuse to receipt a prospectus. And you see there, including a base shelf. This has become far more prevalent of late. A base shelf is another aspect of the prospectus regime where companies will put together a prospectus document which has a shelf life of 24 months. And then as their capital needs evolve over the 24-month period, they'll file a series of supplemental documents to support additional capital raising. The bolded point in this, and this is directed to MMSA members who would be writing technical reports, part of the prospectus offering is a company needs to disclose what they intend to use the capital they're raising for. And in the case of mining projects, we then direct a linkage to the technical report. So the qualified person who's making recommendations for phased work in a technical report, those recommendations should necessarily align with the prospectus filed by the mining company. Next slide, please, Victoria. We'll also undertake continuous disclosure reviews, and this is where we may use a risk-based methodology to consider which mining companies may be more inclined to have non-compliant material disclosure in their continuous disclosure record. And by their continuous disclosure record, we mean all of their filings, news releases, and also all of their voluntary disclosure, like their websites, like their corporate PowerPoint presentations, like their marketing documents. And fundamentally, the main objective for CD reviews is, one, to assess the company's technical disclosure for compliance with the rules at any point in time, but it's also, we use it as an opportunity to help educate the companies about their obligations and move them into compliance. A full review would be really broad in scope. We probably will focus on all of their selected risk criteria. Sometimes issues will come to light and we'll undertake an issue-oriented review, for example, where we may focus on a very specific technical issue based upon a complaint or based upon something that's brought to our attention, news releases, or an organization. An example is several years ago, we did a focused issue-oriented review on website corporate presentation disclosure of technical information. Next slide, please, Victoria. You want to take it from here?
Yeah, I think this is where I take over from you.
Okay, great. I'm going to turn off my video.
So what happens once we undertake one of these reviews is, what would you see as a technical report author or as a qualified person signing off? And what we generally do is, during any of those reviews, we provide what we call a comment letter. And that would be sent via email normally. It used to be faxed, but faxes pretty much don't exist anymore, as we were discussing the other day. It will specifically outline what we've identified against the instrument or the technical report form that does not comply with the instrument or the requirements of the form. We'll say what document we reviewed, where we found it, that sort of idea. And we will request that the company, sometimes we just request that they explain things further or clarify, because as Chris alluded to, this disclosure that we're regulating is for someone who's intended to be a reasonable investor or a reasonable member of the public, but they may not be a mining expert. The company is generally requested to respond within 5 to 10 business days, 5 days if it's something very urgent and seems particularly egregious, if you will. And the disclosure review process and these comment letters may involve some back and forth and some discussion. And one of the things that everyone who's a member of MMSA or any other association, we're always available, whether it be ourselves, our colleagues in Ontario, or our colleagues in Quebec. We're always available for phone calls, discussion, and emails to clarify any of the comments that are received. This is a sample comment letter. It's a little bit doctored for the purposes here. It's not specific. So if you read a project name in the second text box, that's made up or manipulated so that we're not disclosing. This, we would say exactly who we are, what we're doing, and again, identify what disclosure we looked at, where we've provided guidance on the issue or instruction, what section of National Instrument 43-101 or the technical report form the disclosure has generated the question from. In this case, it was a discussion on a preliminary economic assessment technical report. And we provide any company that we send these comment letters to the deadline, what they have to do, what they have to respond to. And we are always willing to say we made a mistake. Sometimes disclosure is not as obvious as we might believe it to or want it to be. So sometimes we didn't see things. And sometimes with a little bit of further explanation, an issuer can discuss with us and say, no, this is not what occurred. And we may have them then issue either a clarification, but if what we've identified has truly happened, the issuer could be placed on what's known as the issuers in default list, which means they can't file a prospectus, an offering during that time until they correct the situation. They may have to refile a document, might have to revise a technical report and refile that. They might have to refile another document, such as an annual information form, or wherever else we found technical disclosure that does not comply with the rule. Some of the top deficiencies that we've seen, and we're going to jump around a little bit, but these are the things, and it's given you the section of the instrument in National Instrument 43-101, the top 5 problematic disclosure issues that we find with specific regard to the rule itself, which is a part of our securities law, is section 2.4, the disclosure of historical estimates, section 3.3, which is broad and general, the disclosure of exploration information. Section 2.3, which are specific things that we restrict the disclosure on. If you do not follow the 4 parts of section 2.3, if you disclose things outside of these, or if you omit things like cautionary language when talking about a preliminary economic assessment, these things are all restricted. And to disclose these items, the things that are there must be followed. Section 2.2, all disclosure of mineral resources or mineral reserves. And section 3.1, and this is the most common of all errors, is people forget to name the qualified person that is responsible for the disclosure of the scientific and technical information. And as Chris said, this is the gatekeeping role of a qualified person. The qualified person is the CSA's definition of an expert, and they do take responsibility for that reasonable member of the public, the reasonable investor. They're saying, I am an expert. You can trust what I say. I've done it to the standards of my professional association, and this is what you need to understand. In a technical report, and all of those things that are part of the rule directly, those can be incorporated in technical reports. But in technical reports specifically, the top 5 areas where we see deficiencies in a technical report is item 3. And I'll give you a summary of what a technical report is if you're not familiar with it in just a few minutes. But item 3, reliance on other experts. And there is a section because an engineer or a geologist is not an expert in every single area of mineral projects, scientific and technical information. So we do allow a qualified person, an engineer or a geoscientist, to rely on issues, information from the legal, political, environmental, or tax areas. So you may find another expert and they may have better knowledge of this area. So you can say, I believe this person, and you name them and you say when they provided this information. The qualified person still assumes responsibility, but says, I've got it from someone else, and they're also an expert, but not a qualified person. Data verification, item 12. Chris touched on this very early on as one of the core elements of what has to be done for disclosure. The qualified person must verify data, and we have a definition of data verification directly in the rule, and certain requirements. Item 12 of the form says the steps the qualified person took. So it's not somebody else who did the work. It's not a previous report, nothing like that. It's actually those qualified persons who are the author of that technical report. What steps did they take at that time to verify that data? The last 3 of the top 5 deficiencies in a technical report. Item 11, sample preparation, analysis and security. Item 10, drilling, any drilling on the project that's being used. And then item 14, mineral resource estimate disclosure. There's a couple of things there, but they all fall to, if you read the technical report form 43101 F1, as it's known, they are missing all or some of the elements of those form requirements. So as we said, we talked about our review process. What happens if someone doesn't comply? There are a lot of possible outcomes. Clarifying news releases, retraction of information. We hate that when that happens. We've had several instances recently where qualified persons have declared mineral resource estimates, and they haven't followed industry best practice standards, those CIM definitions that Chris spoke to, and the company in question has had to retract the mineral resource. So that's a significant occurrence for any company that's had an initial resource estimate and then has to say, no, that wasn't done quite right. And in that case, we actually referred a qualified person to their professional association to review their practice. Amending and refiling a technical report, which I also already mentioned. Filing a new technical report that could have been triggered by disclosure on a website. We get lots of people, we see from many companies, they get quotes from their president and CEO, and they go offside of the rule and they trigger the requirement to file a new technical report. And this could be economic analysis. Everyone likes to promote their property, and they may say, we're going to have a life of mine of 15 years and we're going to have an NPV of $7 billion. And they don't have any technical disclosure that supports that. And that's just all in a presentation or a quote on their website from the president and CEO, and they will have to file a technical report to support that. The company can be placed on the default list. If we don't get a response from a company or an issuer, or the disclosure is so offside and the company refuses to correct it, there could be a cease trade order issued, which is significant. And that means that not only can, if you're on the default list, you can't raise money via a prospectus, but you can't trade your shares at all. And you could be referred also to our enforcement or compliance groups that all of the securities commissions have for further investigation. And that could be into the disclosure practice of the QP, or it could be into the board and management of the issuer. Other possible outcomes, we've actually seen 2 this week. There are 2 class action lawsuits involving potentially disclosure from mining companies about their mineral projects. And as I mentioned, if we see some disclosure that's really offside, it may lead us to question a qualified person's practice. In the case of the retracted mineral resource estimate, as I think I mentioned, we did refer that particular QP to their professional association for a review and whether they were actually operating to industry best practice. As Chris said, not a guarantee of good work, but the qualified person, our expert, is supposed to be honest, competent, and show integrity and have the appropriate level of experience. But as you can see in this picture, you've probably figured it out. Not all reports are created equal, and sometimes there's some wolves hanging out amongst the sheep, and hopefully we identify those, or hopefully we get complaints or inquiries from the public that say, hey, this doesn't look right, and that does happen. So not all technical reports are created equal, but we do operate on the assumption that anyone who has professional standing is going to practice and both conduct the work and disclose the work as they should and to a professional standard. Chris already touched on this, and I won't go into too much more detail. Technical reports are not approved by the regulator before filing on our CDAR system, similar to the EDGAR system in the United States. The company, people always say this to us, well, they have a 43101, it's not a brand, it's a technical disclosure form, and they assume that because someone has written a technical report under 43101, that it's a good company and or it's a good project. We don't evaluate the merit of the project. And that a technical report is over 500 pages. So it must be good. It's an advanced project. It must be going into production. Technical reports are supposed to be summaries, again, understandable by the reasonable investor. And then, of course, how could the project fail? It had a technical report. So exactly what Chris said at the very beginning, and we'll wrap up and take all of your questions shortly. National Instrument 43101 is the standards of disclosure. I liken it to say what you did, why you did it, and say what the outcome is. It's not telling you how to collect your samples, drill holes, how to interpret a geophysical survey, how to calculate a reserve or convert a mineral resource into a mineral reserve. None of that is what's in the rule. It's communicating to people what was done, why it's important, and what the outcomes were. These are some of the things that Chris was talking to earlier, some of those milestones that may trigger a technical report. He said the first time disclosure of mineral reserves, also the initial mineral resource estimate, the first time disclosure of a preliminary economic assessment, or 100% changed. Any of those will trigger a new technical report filing. Other disclosures, if the content is contrary to National Instrument 43101, or the disclosure made in a news release or an annual information form or anywhere else isn't supported by a technical report form, it may trigger the requirement to file. And so these are all of the paths that you can use over time and milestones. And it's in section 4.21 of National Instrument 43-101, and it'll explain all of the things that could trigger a technical report. As I said, I'd cover off very quickly all of the contents on the form, which is the general style of and what's required for a technical report. It's broadly similar to the new rules for SK 1300, but in Canada, everything that's in blue is required in all technical reports, and that includes early stage or resource reports. And those brownish taupe colored things are for advanced properties. So those would be properties with a preliminary economic assessment report, a pre-feasibility study, or a feasibility study. So, and then a producing issuer might file a report, and it would also include items 15 through 22. This is pretty much the last meaningful slide. This is the one that talks about those top 5 deficiencies, and it covers off both those areas of the form and for the rule itself. One of the other things that we see, not only with qualified persons being failed to named, if you're writing a technical report, the qualified person is also required to provide a certificate and a consent, but a certificate that explains to that reasonable investor, that member of the public, why they are the expert that they are. And we see lots of people omitting some of the requirements of their certificate. Everything else we've already talked to. It was just to reiterate the other area that we see the greatest challenges in that's on this slide is that economic analysis section. We are also certainly seeing more concerns about disclosure of environmental liabilities, environmental permitting issues, and social impacts, which may involve Indigenous peoples. And we always want qualified persons, and they are required to disclose the risks that they understand around a specific mineral project. And last but not least, and I know the link has been filed in the chat, and that's the link to our huge slide deck that is a summary of our short course offerings, which we try to do at any of the conferences that we're invited. And today's presentation is really that as well. When all else fails, read the form for the technical report, read the rule. They're not long documents. They are somewhat legal, but they are interpretable by a geologist or an engineer or another qualified profession. And when in doubt, please give us a shout or an email. We're always willing to take a call and discuss the requirements or discuss any of the comments that were provided in a comment letter. And unless Chris has anything else to add, we're happy to take all of your questions.
No, let's go to questions because there have been some presented.
Yeah, I can read the questions if you'd like, and then you can answer.
Sure.
One question that came in says, does an MMSA QP need to also be a professional geologist or professional engineer certification to sign a report for a Canadian issuer under 43-101? Is the location of the project relevant? Has this changed depending on province?
So I can take that, and really there's a lot in there to unpack. But first off, an MMSA member who has the appropriate designation that's listed in our Appendix A to the companion policy, that is the professional designation that we recognize, and that is the professional designation for which you are entitled to participate in the National Instrument 43-101 disclosure regime, assuming you have the other criteria, which is, meaningful, relevant experience with respect to the subject matter of the mineral project and the technical report. you know, whether or not you need to be a professional geoscientist or a professional engineer, as those terms, which are restricted use terms in our country, apply, that's depends on whether or not the local professional association, for example, in Engineers and Geoscientists BC, believe that you are in fact engaged in professional practice in engineering or geoscience in British Columbia. So this question is a little bit out of scope, but what I would say is if you are practicing as a professional engineer in the province of British Columbia, Engineers and Geoscientists British Columbia, who are empowered by the provincial government to enforce the Geoscientists and Engineers Act, would necessarily want you to be registered as a professional engineer. If the mineral project is in Africa and you're MMSA, then we look at your MMSA title and designation, and if you have meet the relevant experience requirements and you're staying within the scope of your professional practice, we don't think there would be, you know, you're entitled to practice using your MMSA designation. Does that answer the question?
I think it does. It sounds pretty good. Yes, let's see. The next question is, isn't best practice standards too high a minimum standard? Industry accepted practices would be more reasonable.
So I'm going to punt that one to Victoria.
Thanks, Chris. There's two things that come into play in our regime. So the minimum disclosure standard is what we apply. So a best practice standard, or the definition standards that are included into National Instrument 43-101 by reference from CIM, those are very specific definitions, and those are the definitions of mineral resources, such as inferred, indicated, and measured, proven and probable mineral reserves. But industry accepted practice, CIM also produces in Canada, similar to SME, which are industry standards, industry best practice guidelines. It's a little bit different. So we don't enforce, as Chris said earlier on, this is the professional associations, particularly here in Canada's role, the registration for an engineer or a geoscientist. It is their role to enforce practice. We may question whether a qualified person has followed industry standard practice, industry accepted practice, and we will often point people to the CIM best practice guidelines. And there's CIM best practice guidelines on mineral processing, exploration information, and the estimation of mineral resources and mineral reserves, which are available on the CIM website.
Just one follow on to that. For information, CIM themselves had a big discussion about this when they were when they were updating their practice guidelines, and they themselves struggled. Should we call them industry accepted or best practices? And you can see the titles of the documents, so you see where they landed. They're called CIM best practice guidelines for mineral resources and mineral reserve estimation. CIM best practice guidelines for exploration. So. CIM seems to think their guidelines are generally advocating best practices.
Okay, the next question. Can you please expound on the common practice of using the Chapter 24 for other relevant studies such as PEAs or PFSs? For instance, the technical report is on a mineral resources update and at a relevant study in the Chapter 24.
Okay, so I think we'll start, and Victoria, feel free to weigh in at any point in the discussion. So the fundamental and core concept is that there is only one current technical report on file on an issuer SEDAR profile at any point in time. So if you update a mineral resource estimate and you have mineral reserves, for example, and that mineral resource update is sufficiently, or the mineral resource update is sufficiently material that it requires you to file a new technical report, that technical report must also include those mineral reserves and supported in that disclosure if the company intends to continue to carry forward and reference those mineral reserves. So that's the first point. You have to ask yourself the question, if the company does, if I did a PEA and now I'm updating mineral resources and I need to file a technical report, if I still want to carry that PEA forward, it needs to be included as disclosure in that technical report. As far as putting information in item 24, I think what you're referring to is the practice of having a mineral reserve study, be at the pre-feasibility or feasibility study level, and also having an alternative development scenario disclosed at the level of a preliminary economic assessment, for example, in item 24. Boy, I think we could spend an hour, could we not, Victoria, specifically on this issue? And I think that's the common practice that you're alluding to. And I guess what I would say is our experience with that is it can be incredibly hit or miss. And I will let Victoria weigh on to that.
It is a challenge, and what really, in my opinion, should be used in item 24 is you shouldn't put anything in there that's going to confuse a reader. So if you're doing an alternate scenario or an alternate study, as I said before, you should be saying what you're doing, not what you think you might do. Lots of companies go down the path of examining alternatives. Some people call them trade-off studies, that sort of thing. But you should really be disclosing and focused on what you're actually doing, as opposed to what you think about might work, but you haven't done enough elements of yet. This is something that we really could talk to for a very long time. There's lots of things that companies at all levels of mineral exploration and mining consider, and they don't do the same level of work, and they don't do the same level of disclosure or validation and verification of the information, and they decide it's not going to happen. Those sort of things aren't suitable for public disclosure. They would only be confusing or misleading for the reader.
Okay, there's the next question. Chris mentioned that private companies can be subject to 43-101 disclosure requirements. How is that evaluated and enforced?
I threw out a typed response to that in a chat for that one, because we're getting a ton of the questions, so I'm trying to answer as many as I can while we're still talking. So.
Oh,
Well,
okay.
if you want to throw that out, Victoria, that's fine. Just
yeah. We see a lot of the disclosure question. We see a lot of websites and social media, and there's another question exactly about that. What we find is a lot of people hire groups to promote the companies, particularly if the company is private and is maybe doing enough to get them to a public listing. But if we see a private company, and there are a lot of private companies with websites, or they have LinkedIn disclosure or Twitter or Instagram disclosure, less so on Facebook, but there's some. If we do trip over, and I say that rather tongue in cheek, but if we do see this and we see something that's non-compliant, we will send a comment letter, just as we would a listed issuer, and we will explain the necessity for them to comply with the disclosure standard, even though they're not an issuer. And quite honestly, even as a private company, if you're not using the secondary market to trade your shares, we can issue a cease trade notice, and we could also issue a notice of caution about that private company if we do see
are concerned. Yeah, and an investor notice we've put out in the past. And, you know, sometimes, and I don't want to harp on this, but sometimes these are brought to our attention by our enforcement group, who are concerned that there's a nefarious, fraudulent scam happening, you know, bubbling below the scenes.
Okay, here's a little bit of a different question. If a company has a dual listing, SEC and BC, will the BC Securities accept the SK 1300 technical report format, or do we need to prepare two separate reports?
Oh, the short answer is there is no definitive answer. Okay. And I don't mean to be obtuse about this. There are a class of companies who we recognize in both jurisdictions who are allowed to fully rely on the disclosure in their home jurisdiction. MJDS, we call them, multi-jurisdictional disclosure system. And those companies, and truthfully in the mining space, I think there may only be 40 or 50 of them, Victoria, if I'm correct. We will allow them to wholly rely on their SEC disclosure. So those companies are covered. We'll allow them to file with the SEC, and we'll accept that the disclosure is compliant if the SEC believes it's compliant. For the others, the form or the technical report or the summary report form under SK 1300 is not identical to that under National Instrument 43101. There are other differences as it relates to potentially independence of QPs, as an example. So I think what I would say is the company really needs to seek advice from their legal counsel, and they really need to go through, if, for example, you have an SK 1300 document, you would really need to probably do a critical review if that does also meet the full requirements of the technical report form F1. And it may, but it may not. And I think it's probably a little bit too difficult for us to say, yes, it does. And it's a little bit too difficult to say, no, it doesn't. It's going to have to be evaluated on the circumstance, I truly believe, at this point in time. Is that fair?
Sounds good to me.
I agree, Victoria? I think that's,
Yes,
that's the right answer, right?
Yeah. Okay, a company acquires another and needs to issue a technical report on a property that hasn't had any work for 20 years. Does the discussion of the historical drilling have to be constrained to Section 6, or can it also be discussed with cautions and disclaimers in Section 10, pointing out that the issuer has not drilled? Section 6 can get pretty bloated if all historical exploration and drilling are discussed only there.
You want to take this one, Victoria?
Yeah. So if you're treating that 20-year-old information as current and you're relying on it, and you want to use it moving forward and you can verify that data, you can certainly disclose the drilling under item 10 of the form and all the other exploration information under item 9. You can simply put that this was performed by previous issuer XYZ company. If you're going to calculate a mineral resource on it, you better be able to demonstrate that you have verified that historical data. What happens in Section 6, the history of the report, is many of the venture level exchanges here in Canada, the CSE and the Toronto Stock Exchange's venture board, their geo staff on board like to see all of historical information in the history section. But we do say in both items 9 and items 10 that if you're treating the information as current, you should disclose it in those sections and clearly identify that it was done by another company, not by you, but it's still subject to data verification.
And just to that point, I think that's really the great guidance we would give Don. You need to think about what I'm going to do with this information, going forward with this project. And like Victoria said, if it lands in a mineral resource estimate, then you really need to be able to understand the requirements of item 10 for that drilling information. And many historical drill holes or drilling information, you can't disclose the requirements of item 10. They should be left in item 6.
Okay, next. Many developing countries are inherently risky from a political perspective. These risks may be apparent or in many cases are cyclic following political winds. How deep must the QP go? What are the responsibilities of the investor?
So let me start at this one. First of all, you know, the qualified person is not intended to replace the board and management of a company, full stop. Okay. And even in a technical report, political is one of the reliances for which a qualified person is allowed to disclaim responsibility for the disclosure. The expectation is that the qualified person may consider some of these questions, but I think, Robert, truthfully, you know, we do not want the qualified person to be the individual that replaces the material disclosure requirements of the board and management. If I'm a company and I have a material project and I'm operating in a risky environment and there are material issues related that will impact my business, really, to me, that's fundamental that the board and management need to include that in their disclosure through management discussion and analysis, through annual information forms, or through news releases if necessary. And so we do encourage qualified people to consider risk. We do ask these things broadly, but I would say it's not the responsibility of the qualified person to necessarily give the board and management cover for significant material risks their business may face if they're operating in a challenging jurisdiction.
The next question, is the procedure of 43101 different with the 43101 F1? And I'm not quite sure what that question is.
I guess if Hammond were to maybe clarify that, because I'm not really sure either what you're driving at.
Yeah, because the F1 is sort of the instructions about how you put the report together.
Yeah, F1 is the technical report form. National Instrument 43101 is the disclosure standard. So a comparable analogy in the financial world, in our world, would be National Instrument 51102 describes your continuous disclosure obligations, and the form 51102 F1 describes how you have to format your quarterly management discussion and analysis, for example. Does that answer the question?
I think it does. Another one, please comment on companies reporting resources using equivalents and what metallurgical study and/or criteria, for example, actual production data, are acceptable and not.
Don't throw that one to me, Chris. That's you. Okay. All right. That's fine. So look, unfortunately, it's not that baked into our rule, but we've been pretty clear. And I think most metallurgists would generally recognize this. I don't know of any operations where you're going to get 100% metallurgical recovery. Okay. So to include or to do a metal equivalent that doesn't include consideration of metallurgical recoveries, we would suggest is going to overstate the equivalent and is probably misleading to investors. Now, as to the criteria, here's where we would go with this. Obviously, if you have metallurgical test work, if you're involved, and you're able to provide a reasonable assumption, then I think that's what you should rely on. If you are at a resource stage and you may not even necessarily have definitive supporting metallurgical test work, but there may well be an analog deposit. For example, if I'm, developing a sulfide deposit in a place where I know, and it's pretty obvious to me that I'm going to be recovering metals by conventional flotation. There are numerous analogs where you can probably, at the earliest stages of the project, come up with a reasonable assumption for what the metallurgical recoveries would be. We are currently evaluating the efficacy of our standard. I would encourage you to look at section 50 in the JORC standard. It lays this out pretty clearly. And, and if you have no idea what the metallurgical recoveries may be, then maybe it's misleading to even consider an equivalent. Does that answer the question, do you think?
I think it does. Yeah, without the recoveries, you can't even report an equivalent.
Well, it's in our view, it's misleading to report an equivalent without metallurgical recoveries. Now, there are reasonable assumptions for metallurgical recovery, even at the earliest stages of the evaluation of the mineral deposit.
Correct.
And we also know, like I said, we're pretty sure you're never going to achieve 100% metallurgical recovery. And if you do an equivalency formula and you assume 100, if you don't include a recovery, you're assuming 100% recovery, right?
Okay, I have one more question here. There is recurring confusion about mineral occurrences, not resource estimates, having to be added to the adjacent properties section of a technical report if they are not controlled by the disclosure.
Well, that is the definition of an adjacent property, is that it's not controlled by the disclosure. And that's under item 23 of a technical report. And adjacent properties, there's a requirement to disclose those that have similar geological characteristics that are reasonably proximal to the property in question. And it allows for the disclosure of any public information put out there by another company, whether they be public or not, and that you identify the source of the information, and the qualified person is allowed to say that they have not verified that information. But item 23 is pretty clear, and adjacent property in general is defined in section 1.1 of National Instrument 43-101. So it shouldn't be confusing, but we do get a lot of questions about that.
And just to add on, if it's a mineral occurrence documented by the territorial, provincial, or state geological survey, that information can be incorporated into item 7. It may have meaning, but that's the appropriate place probably to disclose it, right?
Okay, that's all the questions I see that haven't been answered. And that's, we'd like to close it now unless somebody has any other comments.
I see one more, Betty, by Nick Tinter on, is there a requirement for a brokerage or bank to use an independent QP to review and sign off on an issuer's study? Brokerages and banks aren't the ones who file technical reports. So I would say, truthfully, the brokerage or bank does their own due diligence and have to satisfy their own requirements. Just to that question.
Oh, there. Yeah, I scrolled down and I see it now. Yeah.
And I mean, look, a broker or a bank can rely on the issuer's QP. A broker and a bank can rely on what they choose to rely on. And truthfully, banks in particular, or financiers, obviously they're in the power position in those situations, then they'll generally engage in fairly comprehensive non-disclosure agreements and due diligence requirements. So in many respects, that's outside of the scope of the framework that we regulate, truthfully, Nick, if that helps.
Okay. Anything else? Curtis, do you have any final words?
The only thing I'd like to say is thank you to everyone who took the time out of their day to join us for this session. It's been very, very informative for all of us, including those who practice in this industry and file reports and work on studies on a regular basis. So thank you to Chris and to Victoria for taking the time out of their day to join us for this, and thank you for the great questions from our audience.
Thank you very much. They were fantastic questions, Curtis. We're happy to be here, and truthfully, we're always happy to answer these questions. So you don't have to wait for a presentation like this.
Exactly. Yeah. There's 3 of us in our team here in British Columbia. Our names and email addresses are on our public website, and our phone numbers are on our public website. And we're always prepared to take a call from a qualified person who's in the throes of developing a technical disclosure document to provide guidance to them.
That's great. That's great. Thank you very much. Yeah, we will have all of these questions and information from the chat. I'll compile those and put them on our website when we upload the video. So thank you very, very much for coming and joining us and all the participants and the great questions.
Enjoy your long week. Enjoy your weekend, everyone.
Yeah, you too. Susan, you have any final words?
No, I don't. That sounds like we've covered it.